Historically, we've lived in a market for the last 50 years with own occupancy rates rising constantly all across Europe. But since the financial crisis, these trends seem to have changed. If you look at countries like Spain, like at Ireland, and also in the UK, the market, the owner-occupier market, seems to have turned the corner with owner occupancy rates slightly going lower, offering opportunities for institutional investors for the first time to really enter in a rental market that is emerging in some of these countries. Historically, renting has always been a major investment class for insurance companies, let's say 50, 60 years ago. But right now, I think with these overall market environment turning, there is an opportunity that we see a fundamental shift in the resi sector that enables a little more flexibility for the countries. As also from the political side, we've seen that governments are less favoring owner occupancy over renting as they have done it in the past. We've seen in the financial crisis a high ownership rate in itself has not a real economic benefit. It can be a drawback, especially if you have an over-indebted household at the end. And it hampers a little bit the flexibility in the economy to react to changing environments. An over-indebted household in one end of the country cannot move easily just because he lost his job to the other end of the country to deal with the new environment. Therefore, I think now we are in a situation where we really can set up a unique European investment story in residential, something that has been talked about a lot in the last 4 or 5 years. If you look at emerging trends surveys or investor intention surveys, everybody said we want to do pan-European resi. But now you really can do that. And that's the point. But you have to be aware of that. Regulation is the big issue on that side. It's not like that regulation is not an issue for the commercial segment, but in resi you're dealing with a larger bunch of tenants. The regulations are much more local and it's much more a people's business than in the commercial side. So you need to have the people on the ground understanding what the regulation is and how you have to deal with it. And that also makes it very management intensive going for resi, and also needs for any investor to have a platform on the ground to able to work on that. For instance, for us, we cannot go from Germany and saying we do Dutch residential. We have our guys in the Netherlands operating the portfolio we bought there last year, because otherwise it will not work. The same holds for the Nordics or for the UK. And therefore I think that's a big issue. And then looking at regulation, I think what we have to keep in mind is that it's not the absolute level of regulation that's an issue. That is definitely the highest in Sweden and one of the lowest regulation levels you have in the UK and Finland. But we have to keep in mind one thing. The regulation has to be stable and predictable. And that's one of the things, if you look at the Netherlands, if you look at Sweden, for instance, they try to claw back some of the regulatory issues because they realize they need private capital to deal with the housing shortage in the urban areas they have. In Germany, we are going the opposite way. We try to increase regulation. So from an economist's point of view, it's a very interesting world. As we see a real-world experiment, does more regulation help or less regulation? And coming to the UK, I would say, you even haven't established a market yet, and you're talking about regulation interference in this market. And think that is not a real environment where you can satisfy investors or encourage investors that they really have a predictable environment. So I would say that's something of the things going forward will be very crucial, because the investment volumes overall show investors are not afraid of regulation. Because if regulation is in place, you know that you have a big market you can access to. Because if you don't have a big rental market, why regulate a market that is nearly non-existent? So regulation is not holding people doing investments, but volatility in regulation, unpredictability in regulation is holding back the investors. Therefore, we have to be aware of what's going on there. And on the other hand, one of the main things is, given the low yield environment we have on the alternative side, resi is relatively more attractive than in any years in the last 10, 15 years. But I would say it's not the classical buy and hold most investors are targeting. It's being creative, adding value by break-up sales, doing refurbishments, repositionings or office to resi conversions. That will be one of the main drivers of investments going forward.